Welcome to Bears in Exile. Today is Tuesday, September the 4th, and this is the market overview. Looking at the Dow, SPX, VIX, TNA, UU, PFXE, GLD, SLV, and all the rest. So, today was pretty cool, in my opinion. It was up, it was down, it was up, it was down, and by the end of the day, it was... Well, I guess it wasn't really up, but it was up off the lows, and by the end of the day, it was down. Not as much as I would, care for myself, but it was a good showing. After the pop-up, which was Friday, it was nice to see a little more selling come back into play. And starting off with the Dow, down... almost 55 points. This is running a little bit slow. Nice to get back to a normal video schedule though. And lots of encouraging signs for the Bears. We noted on Friday we did not close above the top of the red candle, although we did, pierce above it or look above it, getting to the major price consensus level for, actually that came up, how funny, it came up to the new month's major price consensus level, which was not formed on Friday, and backed away. Very interesting. But beyond that, it didn't close above Thursdays, and that was encouraging. Today, we got a new recent low, just by a smidgen, but nonetheless, it is what it is, and that is a very encouraging sign. Notice it is doing battle with the long-term moving average bar, which we said back here should be the case, and that's good, fighting with it, seesaw back and forth. Beyond that, nothing in the heat map to speak of. Moving down on the 14-day RSI moving average, moving down on the stochastics, moving down on the CCI, the RSI, and yep, even after a tick up on the MACD histogram, a new tick down, it is slight, and down on the MACD itself. Very nice. And ending today with, not a hammer. I guess you could call it a hammer, but I mean, it's almost 50-50 tail and real body. It did close below the halfway mark of Friday's green candle, which is also encouraging. So overall, definitely more bearish than bullish. We got a little tiny bit of an attempt at reset of the secondaries. We didn't know if it would go up higher or not. So far, decent. Could change tomorrow, but nonetheless, I'll take what I can get. Beyond that, going to the 60-minute time frame, we can see the big nasty drop at the open of the day. It was fabulous. It's too bad we didn't close at the lows of the day. That would have been so encouraging, but that's alright. It did enough all by itself. Getting a little bit of a bounce back up and going down by the close. We can see that it is attempting, or its little bounce is underway for the majority of the day. It could go to the top. I hope that it doesn't. I like the lower lows and the lower highs. Very nice. Hope we can maintain that formation going forward for at least a couple weeks would be ideal. But it is a bit early for all of that. And so far, let's see here. And in the daily, we still have a whole bunch of negative divergence. Talked about that many times in the past. And we don't know yet if now is the time that it's going to play out. But nonetheless, pretty cool. Going on to SPX, there isn't going to be too much difference except that S&P was much stronger than the Dow today. It did get a new recent low. Very slight. I'll take it. Ended with a hammer. And but beyond that, we have pretty good alignment in the secondaries for further movement down. I like it. And 60 minutes just like the Dow, no need to rehash. Could look worse, but doesn't look that great either. Going on to the VIX. VIX has been doing great. Really, really good. Today, bumping its head into the upper Bollinger Band, backing away. Red candle. That's okay. It's approaching the upper price consensus level for the previous month. It is above the newly formed upper price consensus level for this month. And it's approaching the previous high from August. So, straight shot all through all of these. Yeah, doesn't usually work that way. Much higher close than Friday, but red candle. Beyond that, 14-day RSI moving average moving up, along with the MACD histogram, along with the MACD, along with the CCI. Downtick on the RSI, downtick on the stochastics. Might need a little bit of a pause, maybe even go back and retest the major price consensus level from the previous month. But it doesn't look bad. It doesn't look bad. And normally when you clear the long-term moving average bar, you come back for a retest, you bounce off, and then that's very bullish on what you're looking at. So, am I worried about red candle today? Nope, not really. And going on to TNA. Wow. This one was pretty darn amazing at one point today. Just taking off like a rocket. Very bullish. But it still has not come to its previous high from a little more than a week ago. You have everything ticking up, which is nice and bullish. Still waiting on real bearish cross of the MACD histogram. Even with this big, I'm sorry, not the MACD histogram, the MACD itself. Even with this big old bar, look at the positioning of that. You could easily have this be a whipsaw. So, not overly concerned about that. And looking back the last couple of months, this is still far away from its previous highs. So am I worried about this one just breaking out and shooting to the moon? Not really, not at this moment. And UUP, the dollar. Very nice. Slight move up. We have no uptick, unfortunately. Maybe we'll get that tomorrow. I should get rid of this line since it doesn't really mean too much. And what does there say beyond this? Well, it needs to have a retest of the 200-day moving average, and hopefully it'll get above it and bring all of this into question. But if it goes up, hits its head, drops it back down, bad news. Bottoming area in the heat map still. 14-day RSI moving average moving down still. Stochastics in disagreement. Up on the CCI, up on the RSI, up on the MACD histogram, and down on the MACD. Yes, very mixed. And yes, it seems pretty darn overdone, but got to have that retest of the 200 and see what happens. And FXE, the euro. It's done its gap filling. A little bit of weakness today, nothing really special. Most things pointing up or going sideways. We have no downtick, topping blip in the heat map. Down on the CCI, sideways on the RSI. Disagreement in the stochastics, up on the 14-day RSI moving average, up on the MACD, down on the MACD histogram, which is slanting down. I don't know. Look at all this wobble. We have excessive separation. There definitely is a problem here. And even if it turns out to be bullish, it still needs to come down, hit the long-term moving average bar, and bounce off. So, it makes sense to me that there should be some weakness in the euro in the days to come, and what happens at that point will be critical. CompQ, the NASDAQ, very strong thanks to Apple. Closing above the major price consensus level for the new month. It is a hammer. It is still in a topping area. Moving down on the stochastics. Moving sideways on the 14-day RSI moving average. Up on the CCI, up on the RSI, down on the MACD. And very slightly down on the MACD histogram. Very much a push-pull. Very much a push-pull. And Apple, very strong. They announced their iPhone 5 for the 12th. It did its bubble corrective move, and now it's trying to move back up. And still slanting down on the MACD histogram. Don't have a bearish cross on the MACD yet. Up on the RSI, up on the CCI, up on the 14-day RSI moving average, and disagreement in the stochastics. So it did its bubble corrective move. We said we couldn't say anything bad about Apple until that point. It finished its bubble corrective move. We were waiting to see what it did next. They had the announcement, and it's a big green. So at this moment, nothing really to do with it. And GE trying to get a better read on the Dow. Doesn't look healthy now, does it? Nope, nope, nope. Sure doesn't. Moving down on everything. Definitely negative. Definitely a bad sign for the Dow. And below the lower price consensus level for the new month, fighting it out with the long-term moving average bar, which is going to take some damage, as the short-term moving averages are now starting to enter it. So, bad for the Dow. Good for the bears. Excellent. Beyond that, 20.20 upper price consensus level for the previous month, and lines up with the bottom of this candle and this candle. Seems to be a logical area for it to go, and then we'll have to see what happens. Everything is in alignment for that, so makes sense to me. And JP Morgan, the most important bank. And once again, the 200-day moving average saga continues to play out. This time closing below it, closing below the major price consensus level for the new month. And pretty darn good alignment with everything ticking down, with the exception of the slow stochastic is ticking down as well. Everything is ticking down. All we need is a firm, strong single thrust down, and this spell will probably be broken. XLF, the financials as a whole, much stronger than JP Morgan. It is almost a nicely formed spinning top. Notice the Bollinger Bands are constricting. There is a move coming. And very mixed on all the secondaries. CCI going sideways, 14-day RSI moving average up. Stochastics mixed, up on the RSI, down on the MACD. And very slightly, that's really hard to tell actually. MACD histogram is slightly up. And I thought it was slightly down. Very mixed, but definitely more positive than JP Morgan. And going on to GLD. After its powerful move on Friday, continuing its climb slightly. Spinning top. Definite topping area in the heat map. Big. And everything ticking up. Negative divergence. This will be very interesting to watch. And SLV, more of the same, actually better than gold, which is surprising. Definite topping area in the heat map, everything ticking up. Not bad. I'll be curious to see where it gets its downtick, and if it's able to maintain. And continuing on to what is left. Yeah, is there anything left? USO, oil. When oil is bullish, market is bullish. Downtick today, resolved intraday, strong red candle. And CCI down, RSI down, MACD down, MACD histogram down, 14-day RSI moving average going sideways at a top, stochastics mixed. This seems like a natural candidate for a trip down to the lower price consensus level for the new month, which coincides with the upper part of the long-term moving average bar, and we've closed below the major price consensus level, closing below the middle Bollinger Band. Looks natural to me. So slightly bearish biased, but we'll see what news they can invent overnight. And that's about it. I think it'll be an interesting week, and especially with the ECB thing getting closer and closer by the day. As always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Thank you.